What up guys, today we're going to talk about the VWAP, the volume weighted average price, and in this video we're going to cover everything from adding the study to your chart and customizing it to learning how to use it. First, let's go ahead and add the study to the chart. Simply go to any chart, navigate to the top menu, click on that chemistry flask, edit studies, search for the VWAP, double click, and we added the VWAP to the price. Click OK. But you can see it comes with the upper band and the lower band. Let's remove those, go back to the studies, edit studies, click on that settings icon next to the VWAP, navigate to the upper band section, uncheck show, go to the lower band section, uncheck show. Now let's go back to the VWAP, and since it's a very important level, let's change the width to 2, let's change the color to orange. Click OK, another OK. And now we have the VWAP on the chart. It's this orange line. Now there's a difference between a regular moving average and the VWAP. A moving average is the price of a stock over a fixed period of time. Like the 9 moving average is the average price of each candle over the past 9 days. The VWAP on the other hand is just like a moving average but factors in volume. This is very important because volume tells a big story. Volume is crucial for day trading. So the VWAP not only calculates the average price of a stock, but it also factors in the amount of volume traded at each price throughout the whole day. Now you cannot use the VWAP on daily time frames. It only works on intraday charts. And the price of the VWAP is the same across all intraday time frames. The 1 minute, the 3 minute, the 5 minute, even the 15 and the 30 minutes. That's because the amount of volume traded on intraday is the same regardless of the time frame. The VWAP is the equilibrium point of a stock, so it's the same on all time frames and it only works on intraday charts. And that's why I like the VWAP, because any trader using any time frame can look at the VWAP and recognize and see what I see on the charts. And that's day trading. It's a self-fulfilling prophecy. All day traders across the globe recognize the same pattern and enter at the same time. And that's what it gives it, the volatile moves, the jumps, the spikes, the dumps, the rug pulls. Now the VWAP was originally used by investment funds and money managers. The VWAP has become increasingly significant to technical analysis and day traders as it provides a way to determine the general direction of intraday prices. So whenever we see a stock trading over the VWAP, then the bulls are in control. If it's trading under the VWAP, then the bears are in control. And the VWAP is the best intraday indicator and probably the most respected indicator by day traders. It shows very obvious signs of resistance and support. Now let's go back to the charts for a bit. You can see the VWAP is the orange line on both my 5-minute time frame and my 1-minute time frame. And it's also the same price, $233.30 on the 1 minute, $233.30 on the 5 minute. And you can see on my daily time frame, I don't have the VWAP because the VWAP doesn't work on daily time frames. I only have my moving averages on my daily. I have my 9, my 20, my 50, and both the simple 200 and the exponential 200. Now let's go back to the 5 minute. You can see the VWAP reacts and moves very differently than the moving averages. The VWAP moves way slower. You can see the moving averages move along with the price action, while the VWAP hangs in the back. That's because the VWAP is the average price of a stock on that trading day. The 9 moving average, on the other hand, is the fixed price over 9 days and the 21 over 21 days, and they don't include volume. The VWAP gives you the fixed price and weighs in the volume to calculate the average price of a stock on that particular trading day. In my opinion, the VWAP is one of the best indicators you can use for your day trading strategy. Institutions and hedge funds rely heavily on the VWAP. Whenever they buy or sell stocks, they often get in or out as close to the VWAP as possible, as close to the average price of a stock as possible. Think of the VWAP as a rubber band. The more the price gets extended away from it, the more risk there will be for it to snap. And eventually, it's going to snap. Now here's the formula of how the VWAP is calculated. You can see it factors in the fixed price and the volume. Moving on. Now a lot of people use the VWAP as dynamic stop loss. Some traders use the VWAP as a trading stop loss level. They adjust their stop loss orders based on the VWAP, aiming to protect profits and exit the trade if the price drops below the VWAP in a long position or rises above the VWAP in a short position. So not only some traders enter right at the VWAP, but they also put their stop loss as the VWAP. As soon as a stock crosses the VWAP, they're out. That's their stop loss. They don't give it a chance. They're not gonna wait. As soon as it crosses the VWAP, they cover or they sell. And it's also important to note that VWAP is most effective during regular trading hours when volume is highest. Volume is crucial. Without volume, the VWAP doesn't work. Not only the VWAP, also any indicator, any study would not work if volume is not present. Now, before I show you how to use the VWAP, let's talk about how the VWAP can act as dynamic support or resistance. Look at this example. On that first test, the VWAP held as resistance. Then when it broke the second test, that's a false breakout. That's a bull trap. That's an inverted hammer. And the next candle that makes a new low, that's a great short entry. I would be very comfortable shorting the stock right here. And you can see when it came back to test the VWAP again, the fact that it did not break is a confirmation for a bearish intraday trend. And you can see it went back down. Then it got tested for the fourth time. And finally, I think the bulls gave up right here and the stock started heading down. Again, think about the VWAP as a rubber band. It gets extended away from it, it comes back to it, extended away from it, it comes back to it. But eventually, at the end over here, the bulls gave up and the rubber band snapped and it started heading down. Now let's look at a support example. Look at the opening bell. That blue line is the VWAP. The stock broke the VWAP. And in day trading, we have this thing. If resistance breaks, it becomes support. Vice versa. If support breaks, it becomes resistance. So early in the morning, VWAP was resistance. When it broke, now we look at it as support. Remember, everything trading over the VWAP is bullish. Under the VWAP is bearish. So now the stock is bullish. It came back to test the VWAP again, held as support, and again, and again. Now before I show you two ways to trade the VWAP, just keep in mind that false breakouts can happen. You're never gonna find a 100% accurate indicator. There's no study, there's no signals that work 100%. Nothing works 100% in the market. Now the VWAP might work 70% of the time, 80% of the time, but those other 20 to 30%, you're gonna get false breakouts like this one. Just keep that in mind. Now here's two ways to trade the VWAP. The first way is a break, then a retest. Just like you see on this chart right here. It broke the VWAP, went back to retest it, it held, then it went back up. Usually when a candle breaks the VWAP and closes above it, there's a 70% chance that it will come back to retest that level again, the VWAP again. You can see over here it broke it, then there's a 70% chance it's going to come back and touch it again. It did, it held as support, and it continued back up. Now the other way to trade the VWAP is if you're confident enough in the trade and you anticipate a break, then you're going to see a huge spike or a dump. Because sometimes when a candle breaks the VWAP, it takes off very quickly without going back to retest the level. Remember, some traders use the VWAP as a dynamic stop loss. So they won't even wait for the retest to happen. As soon as it crosses, they're selling, they're covering. And that's when you're gonna see a big break, huge spikes. For example, this stock, DWAC. You can see it broke the VWAP right here and it got dumped $1 right away. And it did not go back to retest that level either. Now these breaks, they don't happen a lot. Most of the time you're gonna see a break then a retest. So the VWAP can be used as the equilibrium point of a stock. Because the VWAP is the place where most traders sell and buy. Because that's where most of the opportunity is. Again, imagine a rubber band. The higher it stretches, the stronger it's going to snap. This way, you can evaluate if the stock is too extended and risky to enter. Now imagine if you didn't have the VWAP on your charts. Then you wouldn't be able to catch any of that. You're not gonna know if you have resistance coming up. You're not gonna know if you have support. Or maybe none of your strategies are working and you're looking for a new one. I highly recommend you implement the VWAP in your trading strategy. So, thank you guys for watching. And if you want to see more videos like these, make sure to hit the thumbs up button and subscribe. And since I believe in freedom, you're also free to leave a dislike if you don't like the video. And if you have any questions, leave them down below. I'll respond to every single comment and question. And I hope you guys have an amazing trading week. Peace!